Hey guys, welcome back to Blockcast. We are at our weekly rant time. It's Simon here and my co-host Will. How are you, buddy?
Good, Simon. How about that Coinbase?
How about that Coinbase? Everyone got really scared because Coinbase said that they're is it the Maldives, I think, where they put a license in place and create a company, and everyone's going, oh my God, Coinbase is leaving the US. It's all over. That's not what they're doing. What they're doing is they are avoiding the US regulation. That's for sure. Because yes, everyone kind of knows that the US is being hard on crypto, and so Coinbase is opening its options up. And what they're doing is not different to what Binance does and what FTX used to do, because Binance has its international company and it has a Binance US listed company because it has to abide by different rules in the US. So Coinbase is doing the same thing. They've sat there and going, okay, well, they're a public company in the US, so they can't exactly just entirely move everything, but they are creating another company in the Maldives, I believe it was, to basically have competitiveness with other international exchanges because they don't have to abide by the US regulations by doing that. And so what this means is Coinbase is probably, if you're an investor in Coinbase, it's probably a good thing because they are adding, I guess, the potential for more international customers because they've now got two companies that they part own, and one of them can be more competitive, so they can actually go after, the likes of Binance. And they are still going to have their arm in the US looking after Coinbase's majority US customers. So they're still going to have that. I said Binance did the same thing. FTX did the same thing. FTX had FTX US and FTX International, just simply because they didn't want to have to do the regulations in the US for everybody in the world. They were making it too hard. And I guess it's just an example of what's been talked about in regulations a lot is that the US are making it so hard that everybody's leaving. And this is just another part of it.
I wonder if this is a harbinger of things to come, where companies in the US slowly start to straddle into more crypto-friendly places that are actively signaling crypto-friendliness versus just being a little bit vague like the US and some of the jurisdictions. And the second thing is that new companies coming up are finding it really difficult to offer opportunities to people in the US to even take part in ICOs, IDOs, IEOs. It doesn't matter. It's becoming increasingly difficult for Americans to take part. And in the end, if this becomes a trend, it looks like new services might be starting up in the Maldives or other friendly places.
Yeah, absolutely. It's definitely a sign. I guess the lucky thing for the US is that because they are such a massive market, these big companies still need a presence there. They're not going to walk away from the US and the US market because of regulation alone. Like if it was Australia, they might just walk away from it. They go, you're too small, you're making it too hard, forget you. We won't even service you. But the US is too big for that. So what they do is what Coinbase is doing. They set up one company with rules for the US and one company for everyone else to make it easier and more competitive because, Coinbase can't compete when it comes internationally with Binance if they're trying to follow US regulations. And so that's what they're going to do. And I think it's a good idea for Coinbase to do that from a business perspective in so many ways. And I don't mind us being less, directed by the US. I think it's a good thing because maybe the US has to eventually go, well, hang on, we're losing all this innovation, we're losing all these companies, we're losing all this business, and maybe they will, change their tune a little bit about how hard they're being because, they still want to be at the forefront of technology, and they won't be if they let this go.
Oh yeah, and hopefully they do it faster than the speed of government, which is always an issue.
Yeah, look, I think it's a problem the world over, maybe the Western world over, with, I guess, the baby boomer generation who are resisting change. They are still the largest voting bloc, although the millennials are definitely starting to run that down as the baby boomers, start to die off. That's just, demographics. But the baby boomers are in charge, and the baby boomers are, I need to protect what I have. Whereas obviously the younger generations are going, I need to take advantage of the opportunities that are in front of me because I've got a long path ahead. And so that's normal human issues, I guess. But the baby boomers are in charge. The baby boomers are resisting change because the baby boomers don't want to change. And I think that's part of the whole government issues around this stuff.
Oh yeah, and it's really hard to convince a baby boomer, let's say, on what the value of an NFT could be. an older person, to an older person, it makes a lot of sense to send flowers as an expression of love. To a much younger person, it makes more sense to send a virtual image of flowers, and the receiver is actually really happy to get that. Whereas, if someone sent their girlfriend a picture of flowers back in the 70s, I think that would have probably not gone really well.
That's a really cool analogy. Maybe it should be, an NFT bouquet of
Yeah.
flowers. This is your
Hey,
one-off unique bouquet of flowers. That's kind of cool idea.
cannot be duplicated.
But yeah, one of one. Jeez, can you think of the regifting though?
Yeah.
Just
Yeah.
constantly regifting these flowers.
Hey, honey, I got you a picture of flowers, and here's a photo of a Ferrari. Go with it.
And then she's going to go look on the blockchain, look at the scanner, and go, "Hang on, but you got it from that person, who got it from that person, who got it from that person. This is like an 8th-used set of flowers."
Secondhand. What the hell?
Hey, that might be the future. Who knows? Who knows?
Yeah, times are changing. So who knows?
And well, that's the thing. You can't send flowers distances very easily, mind you. With Web 2, you can contact someone over a distance to send flowers locally. So I don't know. That's an interesting idea. Anyway, that was an interesting side topic. What about price, mate? What's price been doing of late? What are your thoughts?
Oh, price had gone down last couple of days. Yeah, we're back down to $28,000. But I still think we're in a bull. What do you think, Simon?
It's so funny how, especially crypto Twitter, the bears came out and everyone got fearful again from a little drop. It's not up only. We're definitely not in an up only period of the market. Like, we're a long way from that, and we're still in the chop. And I guess you've only got to compare it to 2019 to see what the market actually did. And so they're following very similar patterns to 2019 and 2023, in that we have had a large push up from the bottom, and we've had a long consolidation period. But when you zoom in on 2019, there was ups and downs, 20-30% ups and downs constantly throughout that year. So I don't see this year being any different. So I think this is just part of the cycle, part of the volatility. And if it's got you worried, you're overexposed. Whereas for me right now, because I am still dollar cost averaging in, gets me excited again because the prices are a bit lower than the last time I bought it. And so that's a good emotional state to be in, I guess.
And if the price bounces back up, it just creates another level of resistance, and that's great. It means that we're reaching lower lows and higher highs, which could signal more strongly a bull run, which I think we are in already.
Yeah, I agree. I mean, look, I'm not a trader. I'm pretty sure you're not a trader either. So I just tend to zoom out and, okay, the price 10 days ago, we're at the same price as 10 days ago, pretty much. So this is just noise. This is just the noise of the crypto markets.
And it's going to be volatile like that for another good number of years, until, who knows, maybe Bitcoin hits the trillions. Which brings up another interesting point. Do you think Bitcoin will always be volatile, or do you think we'll reach a place where it's pretty much a stable coin?
I think you've just got to compare it to gold. That's effectively what Bitcoin's going towards. I know people want to use it for payments as well, and probably it will get used for payments once it gets to more that stable level. And I think the answer to that is we need more of a global adoption. So we can't have more retail pushing into the space. They talked about how in 2021, when we had the bull market on, we got up to like 300 million global users of crypto. And so that's well below kind of the world population. And they're talking about this next bull market. I know I've heard projections we're going to hit the billion users. So that's getting closer to saturation point. And so we need to get to that point of saturation. Like, gold's obviously not used by many people in any way, shape, or form, but it's, I guess, saturated the market. Everyone has access to it. Everyone knows of it, but not many people actually want to buy it, I guess, is the big difference. And I think that's when Bitcoin gets stable, and that when nobody wants to buy it, nobody's trying to make huge amounts of money off it. It's just there to be used as the utility that it is, to store value.
Yeah,
and
it might actually.
Yeah, go ahead.
Oh no, I like what you said in that it's similar to gold, but then it's interesting what you said. it might reach a point in time where everyone who wants it has it, and no one really is looking to sell it, and it starts to approach a point where it's a store of value. It's not really losing too much value. It's not gaining heaps of value. It's just kind of there. And
yeah, that's always been the thesis of gold, is that, you know, an ounce of gold today could buy you the same goods and services as an ounce of gold could 1,000 years ago. So it maintains value. So regardless of what fiat prices might do and inflation of fiat prices, gold has always kind of been, and it's been the best measure of that, of stability over long periods of time. And so Bitcoin will probably get to that. It's probably a decade away from that, at least, I would think, because it's just still too immature. But I think it will get there. But then who knows, because of Bitcoin's utility, it may still have some volatility around it, I guess, because people could start using it for transactions. Once it starts to level out, you know, we can't have 20%, 30% spikes. We can't have, you know, like the last 10 days of it going up. You know, I think it was like a 7 or 8% push up and 7% drop over a period of 10 days. We can't have that and it be used as a point of sale, you know, currency kind of thing. It's not good for that.
So it looks like it might be a speculative instrument, an alternate to stocks, maybe a refuge instrument. When stocks are crashing, go to Bitcoin, and Bitcoin is crashing, go to stocks. Maybe at some point when it reaches the $1 trillion valuation, it might be harder and harder to move the price. You know, if I put in $10 million in Bitcoin, I might cause an uptick or a downtick, but if it's worth a couple of trillion, no one might notice if I put in $10 million into Bitcoin. Maybe once it gets there.
Yeah, sure. I mean, well, Bitcoin has been $1 trillion market cap before, so it's probably got to get more than that. It's probably got to get to about $10 trillion when you know, single actors can't really move the price. And I think that's kind of the gold market cap, is around that $10-12 trillion mark. Don't quote me on that one, but that's when, yeah, people can't push the price with lots of money, is a big thing of it.
What is the current market cap of Bitcoin? It is at
546 billion to be.
Yeah.
But it was up at like 1.5 trillion at the peak. So it has been $1 trillion.
Yeah.
So it gets up there, but that's not enough to stop volatility, because I guess it's not consistent enough. But it'll get it's. I think the short answer to a very long answer that I had then is that yes, it will eventually stop being as volatile. Just because
Bitcoin's stable. Yeah.
But maybe of the deflationary nature of it, unlike gold, where we can still dig up more gold, it may just have a gradual tick up. None of this 80% crashes and 50% crashes and stuff. It'll just be a slow trickle up.
That makes sense. With the growth of population, with the growth of goods, it might just track that maybe.
Yeah, and with the devaluation of currencies, it'll always, I guess, tend to track upwards, you'd have to think. But yeah, it's an interesting one. And I think when we get there, the opportunity in crypto to make lots of money is kind of behind us.
Yep.
And that's what we're here for. That's what we're here for at the end of the day, isn't it? We are here to, you know, a lot of people are here to change the world. You know, they're here to revolutionize the world and stuff like that. But, you know, I'm still here to make money as well. I like those ideas. I like the idea of, you know, separating money from government. I'm all on board with that kind of thesis and stuff. But at the end of the day, I wouldn't be here if I still wasn't here.
See, I've got this belief that any sustainable revolution needs to be profitable. In that, somebody needs to make money.
Go on. I want to hear this.
No, in that when the church was in power, it definitely had provided a lot of good. It you know, built roads. It helped move technologies because the priests could write and everything. And then after a while, the church actually stood in the way of profit. The roads were already built, people could already read, and now the church was just there, I guess, wasting everybody's time. And I think that's kind of how it slowly got, I guess, overtaken by more profitable systems. You know, that's kind of why I personally believe that communism will never really work. And that's in the, what's the book called? The Sovereign Individual. They say that it's really difficult for communism to work and take over simply because capitalists are way better at creating more goods, more weapons, because they're more greedy and there's way more profit. Now, to get a communist to build anything, you have to whip them because you don't have any other incentive. I'm sorry, communists. So I just think that any successful revolution needs to be profitable. And, Bitcoin seems to be pretty profitable so far.
Yeah, and I think like most technology changes and change in general, it needs to be significantly better for people to change. And so that's down to the protocol level all the way up to Bitcoin. For people to change, it needs to be significantly better to do that. And people don't see that, straight away. The things like, when they brought in cars and things like that, nobody knew they wanted that to a degree, and they couldn't see the benefit of it because a lot of the roads weren't really any good for them either. And so it doesn't, it's kind of like you see it a little bit and everyone goes, oh no, that's a waste of time. And you see a little bit more and then everyone, oh, okay, or something else. And then it's everywhere, and I think, going forward with future technologies, AI is, been one of those ones that's really come, everybody kind of knew of it and never really seen it. Now everybody knows about it. And then I think like, driverless cars are going to be the same thing. It's going to be like people have heard about it now. The next people are going to start seeing them, and then it's going to be everywhere as that network adoption, goes parabolic kind of thing. It's just going to go straight up. And so that's technology in general. I think that's the trickery of crypto. I think that's the trickery of Bitcoin especially. So everyone knows about it now. Nobody sees the value of it yet, or has the need for it as yet, but eventually it's going to get to the point where everybody's got it.
Yeah, I guess the quote is slowly first and then all of a sudden.
Yeah, it's like the exact same quote. Yeah, same quote. So I think that's, it's an interesting time for sure.
Speaking of adoption, I remember hearing this theory called infrastructure inversion, and I thought about it when you mentioned cars and roads. And the theory goes that first the technology comes and it's cumbersome because the infrastructure doesn't work yet. So cars came out and there's this cobblestone roads to drive on. It was uncomfortable, not that great, because the infrastructure hadn't been built yet for cars. And then what happened was cars started getting adopted, and then roads started coming out, and then cars really accelerated in the adoption. But the thing with that infrastructure of roads is that when that was built, it became good for cars, good for horses, good for people. So the new infrastructure was amazing for the new technology, and it also just carried all the technology with it. That brings us to telephones as well. Initially, the internet used to run through telephone lines, super cumbersome, super slow, and then people started adopting it and they said, let's build roads for the internet. The internet became so fast that suddenly the internet infrastructure could carry sound conversations and video conversations as well. And so that inverted. And so the theory goes that with blockchain, right now it's slow and it's using all of these things, and the interface is really hard to use and nobody gets it. But if the adoption becomes interesting enough, it's almost like the infrastructure will change and more things will be onboarded onto blockchain. So we won't be convincing people to get onto the blockchain and use Bitcoin. The dollar, assuming it still exists, will be on the blockchain. Money will be on the blockchain.
Yeah, because it ends up being easier and better for it, doesn't it? And you are right there. We are seeing some of that infrastructure changes, inverting what you're saying there, in crypto, because Bitcoin came along and was not fast enough, wasn't really good for point to point, and then the Lightning Network came along and started doing that. And so the Lightning Network could evolve to so much more by the time it's actually used as a point to point. And then same as Ethereum. Ethereum was slow and it was expensive, and then the layer 2s are starting to come along, and now more things and more ideas can be built. So they're talking, about the scaling elements of blockchain, just absolutely going through the roof. And so, just like the internet, and our download speeds, it just kept going more, and people coming up with more ideas to fill up that bandwidth. And so I think that's going to be the same for blockchain.
It was insane a couple of years ago thinking of a social network running on a blockchain. It was totally impossible. And now, thanks to IPFS and all these layer 2s like you mentioned, we've got Lens protocol and all these other new protocols coming out. Who knows what's next?
Yeah, and I guess that's the key to the investing in it, is to trying to spot these really cool ideas that come up that nobody thought of yet, because now we have faster, cheaper. What can we do with it? What can we do with it?
Yeah.
That's kind of always the interesting thing. What is that next, smart developer going to come up with?
Oh yeah, if I could go back in time and be old enough to buy Apple, Google, Facebook, Microsoft,
Yeah, well, you still can buy them, mate. They're still here.
I don't want them at these prices.
I tend to disagree a little bit there, because with the push into AI that Google and Apple have such a monopoly on, I wouldn't be surprised if their prices can keep going bigger, because AI is such a huge thing. We all know about it, and what most people don't know is that Google and Microsoft and Apple are behind most of it. So they've got the infrastructure to be able to run that AI stuff. So
Yeah, that could be
not
big.
financial advice. Don't necessarily go buy Apple and Google. It's not financial advice. But I don't think it's as bad as buy as you think.
Yeah, AI. And I want to see what AI does in blockchain, if they manage to somehow integrate it, or if it's going to be its own separate product.
Well, they talk about how crypto is a new asset class. Maybe AI finds its way into its own. I don't know whether you can call it an asset class, but AI will definitely find its own unique niche in the world. And I think it's scary what it's going to do in the future for us.
Oh yeah,
scary and cool.
Oh yeah, scary and cool. I can't wait to see what happens.
And look, it comes down to the whole, this is where crypto does help in the AI thing. We have, digital scarcity, digital assets, digital identity. And so in a world where AI can create anything and everything, I think that digital identity is going to be very important. And so to be able to prove you are who you are, rather than an AI generated video or an AI generated voice. And I think digital identity can help with that. So I think crypto might have some of the solutions to the problems that AI will pose to us. I'm not saying they're here yet, but I think it's got a chance to help out with that issue.
Oh yeah, definitely. Yeah, definitely want to keep my eye out for AI and see what possible interactions there are. Like you said, it might be proving your identity. That's going to be really important, probably sooner than we think. In a couple of years, I could probably give my photograph to an AI and it'll recreate a version of me with my voice doing anything.
I don't think a couple of years, mate. I think that kind of stuff already exists. I've already seen clips of different celebrities and stuff being auto-generated in AI, and it's not seamless yet, so you can kind of tell. But there's no doubt in like a year's time, I think those problems will disappear, and I think you'll be really questioning, is this the real person or not? It's very hard.
Yeah. And the thing is, celebrities won't be able to stop it. I mean, if a company decided to take a likeness of Jay-Z and create a song and release it, Jay-Z can easily go there and sue them, and with rights. But if some kid somewhere made a really cool rap or asked an AI to write a rap and took Jay-Z's likeness and voice and released a rap video out there, well, there's no way they're going to find that kid. And that song will be everywhere. If it's a good song, it'll be everywhere.
Yeah, exactly. So you probably can go after them if they're trying to monetize it in so much. What happens if the AI monetizes and the AI takes the money from it, and the AI is programmed to try and make more money?
Oh, it's probably going to happen.
We're going to be talking about the richest AI in the world.
Yeah, an AI in the wild with a directive. What else do you need? Give it API links to anything it needs. Oh, that's it. It could generate avatars, have video conversations. You wouldn't even know that you're talking to an AI.
Yeah, I guess the cool thing behind this kind of concept, though, is that you've got a really popular, maybe who should we throw out there as an example? Just even an Elon Musk. If there was an AI that created Elon Musk's persona and knew the knowledge which he knows, which an AI probably could know a lot about SpaceX and Tesla and stuff like that, they could create a 3D rendered version of him, and you could go and have a one-on-one conversation with this AI version of Elon Musk, and it's so seamless that you wouldn't necessarily know you weren't talking to him. Then isn't that kind of a benefit? You're kind of getting to have a one-on-one conversation, but you're not.
Yep.
I'm getting the wind up here, mate. I think that's
we could edit that out.
All right, mate. Well, I think that brings our rant to an end for this week, mate. But I will catch you again next week.
All right, Simon. Until next week.